Hello everyone, welcome to the market update. My name is K Kim. Today is October 11th, 2016, Tuesday. Market did see pretty sharp decline today. S&P 500 index is down 1.24%, while the semis are actually down 2.11% there, with the Dow about 1%, Nasdaq 1.54%, with the small caps about 1.85% down there. So what can we make of today's move? What can we expect going into next few days here? And obviously we've been talking about this level right here. This is where the 50 MA was holding this level of support. As the 50 MA starts to kind of flattening out, it was acting as support there. You can see here, just all throughout. This has been like what, about 3 to 4 weeks. That's a pretty long durational there, as the 50-day moving average, this is 50-day exponential moving average, continues to act as support for about a month. And for the first time since the breakout to the upside on this kind of a rising, or on this pennant pattern, since then, this is the first time the price getting below the 50 MA there. And obviously we've been bound by this falling resistance. We've been talking about this resistance for some time. The price really needed to get above that level. The problem was it continues to cultivate lower highs here in the minor term, meaning the selling pressure continued on. The price was not able to break out above this vicinity and cultivates higher lows and higher highs. Therefore, I think there was a lot of pressures from the buyer. There are a lot of zigzagging action, though. I mean, it will come down hard, and will gap up, and it looked like it was going to break out, and then it will gap down, falls back, goes back up, falls back down, go back up again, and through yesterday we threw that shooting star candle there, and today just that tankage that came into the market, right? So now we're below the 50 EMA. You can see right there on that vicinity. What can we make of this market? What can we expect going into next few days here? And obviously the 100 SMA here, 100 SMA still rising, as you can see. That's the level that acted as support back in early September. This was early mid-September there. For about 4 days we held that level of vicinity there, that 100 SMA. This is a 100-day simple moving average. This was an important level in mid-September there. So this is no coincidence that today the price was able to stay just right at this level. And you can see, guys, we got a little bit of buyer towards the end of the day, because it was that vicinity where the rising uptrend support is hanging out. So we have this two kind of a longer term trend we're dealing with here. We have this rising 100 SMA that has been acting as support back in mid-September. We're back at that vicinity today, and then from all the way back to February of this year, February 2016 here, and going back to June, late June. This is a February, late June, and that's the level currently staying at that level. So we have 100 SMA, rising 100 SMA, and rising uptrend support, and we're just right on that vicinity. Here's the thing: because we found some support in September, in mid-September, if we do see our early buyers going into tomorrow morning, or any kind of gap up, there might be some kind of pop early, couple hours or so. But keep in mind that old support could act as resistance. You know what I'm saying? So there could be, if there's a pop in early morning, if there's some kind of gap up or some kind of pop first hour or so, then watch out that these supports could act as resistance, where this will trying to get up here and then will meet with the resistance, kind of start to fall back over. But let's say this thing's so strong and continues higher, then there's a good chance if we close strong tomorrow, there's a good chance it will come back and really retest this resistance once again. However, if we continue to see weakness, and if this thing starts to gap down below the 100 SMA here, below the rising uptrend support, then you could expect the price is ready to retest that 2119 vicinity. This is an important level of support. This whole vicinity here is important. This level acted as support back in mid-September. So that's a level that if this thing continues to deteriorate going into early tomorrow, then you should see this level, probably some kind of support in that vicinity there. If this thing's so furious and this thing starts to just really plunge, I think that ultimate level that which I think that it would act as strong support will be then 2100. This is what I call gap fill support. I think that level will act as strong support. You can see the back here was gap and the gap was filled. It did act as resistance there, and ever since then the price really was not able to get above 2180, right? Ever since we filled that gap to the upside here, right? We filled that gap. Ever since then this thing really struggled. Well, with that logic, the opposite is true. With that gap here, that gap fill could provide a strong support for the buyers. So should the price continues to slide next couple of days, and if this thing continues low to 2100, I could almost be pretty certain that we may see pretty strong bounce there. Just because, you know, it is a gap fill support, I can't say it as of today. I need to see evidence that it's gonna be a complete reversal. But I think if I throw a Fibonacci there, if you actually, I'm not going to do it in this video, but if you actually do a Fibonacci retracement zone, that's the level where the 50% hoovering in that vicinity as well. So we got 50% hoovering at 2100. We got that gap fill resistance at around 2100. And also, again, the whole area, the whole vicinity, the whole band of support in that level at 2120 and 2100, this whole level, we've been talking about this level for quite some time now. For the last 3 different video updates, we've been talking about this 2100 level. So that's 2100 level will be the level to watch here. So obviously, as of today, the sentiment of the market in the minor term is bearish, meaning the sellers are in control in the minor term. However, that sentiment can't change quickly. So going into tomorrow morning, watch for this support and this rising uptrend support. If there's any kind of buyers in the before open, if this thing starts to gap up, next level to watch is a 2150, and then possibly bring it back up to 2167 in a couple days or so. But 2150 could act as old support becoming new resistance, so we may kind of get stuck there. However, again, if the market continues to slide, 2119 is the vicinity to watch as a new potential support. And then we got 2100, which I think is going to be a provided strong support. Again, this is something that I've been talking a lot about, is that this market is master of shenanigans, master of traps, setting traps. So it can trap the shorts and longs. And that's exactly what it did back here. You see, instead of making new highs conveniently, right, at this vicinity, right, instead of making a new highs conveniently here back in early June, what he decided to do was, let's come down and make new low, right? Because this supports, we're important support. A lot of people are watching that support. A lot of people are looking at that 2130 level. A lot of people stops were just below that level. So let's come down and break that support. Traps, let's take out those stops. Let's trap the shorts. And then this thing made new all-time high. So I think there's a good chance that something like that could be in play because we're still in the intermediate term uptrend. Keep in mind that intermediate term, looking at this price action right here, the sentiment is actually still bullish. Minor term sentiment is bearish, intermediate term sentiment is bullish. Keep that in mind. So if this thing comes down below this support at 2120, sets a trap here, take out all that stops, and then traps the short, because so many people are watching this rising uptrend support. Keep in mind, there's a video lesson I've done on trend lines and pivot levels. Just because it breaks below the support does not mean that it's end of the world. you can see this support was broken as well, but it established another support. You see that? Market is a master of this. Market is a master of setting traps, and it's been doing it for years. Maybe, it's been doing it longer than some of you guys been, alive. So knows how to set traps. So I think 2100 is definitely level to watch, but right now, early tomorrow morning's level to watch would be then this rising uptrend support vicinity and the 100 SMA. If we lose that level, 2119 and then 2100. 2100 again is a gap fill resistance, and it is where it gets below these lows there. Okay, so those are the levels to watch going into tomorrow. Next week, quickly, let's actually look at oscillators and see what they tell us. Let's actually look at a daily chart here, see what they tell us. And obviously, some of these oscillators are falling over. MACD is actually kind of finding some kind of support in that vicinity here, -9 level there. So if this thing kind of come down a little bit and then kind of gets back up like this, that could continue to act as support, where this thing could kind of bring the price back up here. Looking at the RSIs and stochastic, they are kind of in the middle of nowhere, right? So a lot of times what they can do is they will come down, go up, and then they'll pull back a little bit, go right back up. We saw something similar here, go up, come down, and then goes right back up. As far as RSI sentiment is concerned, same thing happened right there. Stochastic, where it will come down, go up, pulls back a little bit, and goes right back up. Here, come down, go up, pulls back. I'm not saying that's what's going to happen, but let's say if the price gets back up and we start to see some kind of movement to the upside, watch these oscillators starts kind of rising back up there. But the sentiment though, as of today, they are all pointing down, meaning there are some selling pressure, and we don't need oscillators to tell us that, because we can definitely see it on that on today's price action, right? So I would have to say this: as of today, benefit of the doubt goes to sellers in the minor term. Benefit of the doubt goes to buyers in the intermediate term. Everybody has a different terms though. When I say intermediate term, I'm talking about the whole year worth of data. Okay. When I talk about minor term, I'm talking about last 2-3 months here. So in the minor term, looks bearish as long as we're below this resistance. Currently, we're staying right at it. So there could be a lot of shenanigans that could happen here. We could see some kind of shenanigan gap up or gap down. Right now at this one, I'm not sure. It could be 50-50, but it'll be very interesting to see how the market is going to deal with this level going into the next couple days. Actually, before I close, let's look at actually minor, because last time we've done minor term sentiment analysis. Let's actually redo it here. I just want to see how it looks. Actually, let's remove. I'll end with this. I didn't mean to go this long, but this is 65-minute chart, meaning each candle represent 1 or 65 minutes worth of data. So we're still dealing with kind of this falling resistance there, and we gotten below this support. Looking at the micro term here, this was a support. This was support that 50 EMA was holding, and then we broke below it. It's interesting to note though, last 2 hours or so, we did see some kind of Morningstar reversal type of candle, right? So if we see this thing follow through tomorrow, that Morningstar, it looks something like this. This is very, very similar right here. You can see you got a bearish day, and you got a long high wave doji hammer type of candle there, and then we saw follow through. Well, here you can see that long bearish candle, and we see that kind of a hammer type of candle there, and we kind of did see a little bit of follow through that last hour. Again, it's not confirmed yet, and that's a strong resistance here. Looking at the 65-minute chart, if this thing continues to play to the upwards tomorrow in the morning, for this thing to really gain some momentum, getting back up to possibly even fill this gap at a 2162, you'd want to see this thing going up here, meeting with that old support, becoming the resistance, slight pullback, and cultivating that higher low and higher high. If we see that in first 2-3 hours, I think there's a good chance we'll come and fill this gap, and then we'll probably try to gap back down to this vicinity right here at about 2162. Okay, 2162. But if this thing kind of goes up and gets rejected and continues lower, then expect that 2120 to come into play, possibly even lower there. So obviously, you know, the sentiment of this in the micro term here, we are still dealing with kind of a lower low, lower high type of deal here, and we are kind of cultivating some kind of a minor term downtrend type of move here, because we got this lower lows here. So if this thing starts to cultivate lower low, then there's a possibility that we can continue to this also possibly look like we might be even having some kind of falling channel, right? So it's a lot to take in, but it's too early to you know, come to a conclusion as of today. I'm just kind of looking into how this market is going to react tomorrow on this rising uptrend support, and also we talked about that we have the rising 100 SMA going in like this. So that's a level to look, and we'll go from there. Have a great night. We'll talk again on the next market update.